Ladies and gentlemen, welcome back. My name is John, and today we are talking about Marvell Technologies. The market has brought down the price of these chip companies, all these tech companies involved in AI. They're all getting repriced much lower, and this is a massive opportunity. So first I'm going to explain what Marvell does, then we're going to go into Marvell's financials, their numbers, what makes them look like such a great opportunity today, and the last thing we're going to do, we're going to wrap it up with an options trade idea. So let's get into it. Marvell, what they do is they are the highways, they are the roads connecting the GPUs and the CPUs in the data centers. All these GPUs and CPUs have to talk to one another. And the way they do that is with Marvell's technology. Marvell has four major businesses. Their first major business is custom AI chips. So now, this ASICs business of Marvell's businesses is the fastest growing of all their business lines. And Marvell has came out and they personally are saying that they see this business being a $10 billion annual business by 2029 alone. Now, Marvell today is doing $8.19 billion in revenue. So let's wrap our minds around this. This one business line of theirs is projected to do $10 billion, and the entire company today is doing $8 billion. Right now, out of that $8 billion, about $2.5 billion is this custom AI chips business line. So this is the massive growth that we're going to see from Marvell. It's these custom AI chips. Now, what's their next business line? It's networking and Ethernet switches. This is connecting all the GPUs. This is connecting everything together. And I know that as token costs come down, the demand for AI is only increasing, which therefore means you're only going to need more and more of this Marvell products. The third business, extremely bullish on this business. I think this business is going to be another step up in revenue for Marvell, more like in the 2030s, and that is optical connectivity. So right now, the way all the information moves in the data centers is through these copper cables, but eventually that is going to move towards light itself. And this has been something we've talked about before. But Marvell makes the chips inside optical transceivers that convert electrical signals into light. So literally they are sending information as light signals versus sending it through the copper wires, because the copper wires are becoming too slow and too power hungry. And it's much quicker and cheaper, because it's less power hungry, to just send it through light. But this technology is still on the up and coming, so it's not fully being realized and implemented yet, but it's coming. So this is the silicon photonics, laser drivers, coherent DSPs, co-packaged optics, that's the CPO, linear pluggable optics, LPO. These technologies allow servers to communicate over fiber at 800 gigawatts to 1.6 trillion and eventually even faster speeds. And this is one of the long-term AI infrastructure opportunities. And number four is their legacy businesses, which are storage controllers, enterprise networking, carrier 5G chips, automotive security processors. Now, why is Marvell an opportunity today? It's because of the recent drop we've seen in the stock. Marvell stock, let's look at it real quick. Marvell traded at a high on June 4th of $316. Today the stock is $186. So essentially it's been cut in half from its high. Now, when I'm looking at the chart, first of all, the technicals are telling me that we are close to a bottom, if not at the bottom. I think it could maybe trade down to 160, but right now we're at 186. So we're in that general area of where I think the support is for Marvell. Now, when we think about the fundamentals of Marvell, let's look at the revenue. The revenue for Marvell for 2027 is projected at $11.53 billion. That is a 40% increase from the year before. And then when we look at 2028, it's going to $16.72 billion. That's a 45% increase from the 2027 number. And then 2029, we're looking at 39% growth to $23.26 billion. So this company is expected to grow revenue at 40 plus percent for the next 3 years at least. And now we look at the earnings. The earnings are going to grow 42% for 2027, 53% for 2028, and 48% for 2029. Those are the projections. So now let's look at the multiple. So the forward PE ratio for Marvell is now only at 46.58 with an estimated EPS growth of 42%. So your PEG ratio is a little over 1. This to me is a cheap company. When you factor in the EPS growth and the PE ratio, you're getting a 1 PEG ratio, which is a good entry point for a high growth business like Marvell. Now is when we start figuring out where our price projections are going to be for Marvell. So when I look out to 2029, I'm looking at a current forward PE to today's price of 20. So if Marvell stayed the exact same price and it was 2029, it would be trading at a 20 times PE ratio. But the company is growing at 48% EPS and revenue is growing at 39%. Is the company going to trade at 20 times PE in 2029? I highly doubt it. So now let's say that Marvell traded at a 30 times PE ratio. Well, if we take the EPS of 9.12 and we multiply that by 30, 9.2 times 30, we get a stock price of $276. Now today's price is $186. So that's a $90 increase from today's price. And $90 on 186 is a 48% upside in the stock. And that is towards the end of 2028, mid 2028 potentially, you could see that price because we would be pricing in the forward earnings for 2029, which is the earnings we just went over. So what kind of option trades are there for mid 2028 around that 276 price? Well, when I look at the option chain and I go as far out as I can, I go to June 16th, 2028, and I'm going to look at the 260, 270 spread. So if I were to expect Marvell to be over 270 by June 2028, this option would realize its full value, which would be $1,000. Now, this option today is trading roughly for $175. Probably with the market opening, it's probably closer to that $200 mark. Marvell would have to be trading at a 30 times forward PE ratio. Today, Marvell is trading at a 46 times PE ratio, and this is after the stock has came down 50%. So the stock has traded well above this 46 forward PE ratio, and all I'm asking is that it trades at a 30 times forward PE ratio in mid 2028, and you have a 5x option trade here. $200 can turn into $1,000. Now, this is not financial advice. I'm not a financial advisor. Do your own research, do your own homework, take responsibility for your own trades and your own money decisions. That's what I have for you guys. I just think that with the market coming down, my mind goes to what is the best opportunity right now today with the prices that I'm seeing with stocks. And I keep coming back to Marvell because it has extremely high revenue growth, extremely consistently high revenue growth. It's already profitable. They're already making money. Jensen Huang has come out and said that this company is extremely important and he sees them being $1 trillion business in the future. Remember, right now, Marvell is worth $166 billion. And all we're asking is for it to go up 50% from here. So to be what, a mid 200 billion company? We're nowhere near Jensen Huang's target of $1 trillion. But remember, I'm asking for it to happen by mid 2028. I thought this was a great option to share with you guys. This is an option that I'm going to be placing, and make sure you check out feedmetrades.com where you can track all your option trades. You can track your call debit spreads like the one I just explained. You can track your covered calls, your cash secured puts, anything options, you can track it on feedmetrades.com. Make sure to stay healthy, stay wealthy, and stay tuned for the next one. Peace.